without wasting any time, we shall start. So before we start, let me read out my disclaimer just to protect myself. Yep. So today's market webinar is intended for educational and informational purposes only, and participants shall not take it as a financial or investment advice nor a trading signal. The accuracy and reliability of the information provided cannot be guaranteed. Hugh Prime and I hosting the session are not liable for any losses or damages resulting from the use of the information presented today. Participants are responsible for independently verifying information and considering their own financial goals and risk tolerance. Okay, that is my disclaimer. Yeah. So move on. This is what we're going to cover today. We will tell what is the geopolitical events, and also I will share with you some of the example of geopolitical events and how does it have an impact positively or negatively towards some of the asset classes, mainly on the forex, and also share with you my thought on potential future geopolitical event. So what is geopolitical event? So geopolitical event is a significant incidents or situation or a development that involve the interaction between politics and geography, particularly on an international or global scale. So the thing have to be, have an impact within the country, and then also have some influence outside the border, across the border. So these events are often characterized by their impact on international relations and also the behavior of the nation and the distributions of power and resources around the world. So these are some of the example of geopolitical events. So it can be political crisis, it can be territorial dispute, conflicts or war, and also can be economic sanction from like international body or between countries, trade disputes, and other actions taken by the government or international organizations that will shape the dynamic of the world affair. These events can have far-reaching consequences, influencing regional stability as well as global stabilities. And so global economy and diplomatic relations between countries. So if you're aware what happened recently, I mean, maybe since early of last year. So these are the example, like we have political crisis. So this one is the domestic crisis, because we know last time, I think few months ago, there's a Russian mutiny where some troops, the president of Russia claims that some troop they betray him and want to throw him down the throne, but after that I think it quickly solved within a few days, so it didn't escalated to a very major event. But other things like political crisis like Brexit. So if you can remember, I think back in 2016, so UK decided to leave the European Union. So this is one of the example for political crisis. And then before that, Hong Kong protests, if you guys can remember years ago, where Hong Kong people, they have they rebuild to being live under the governance of of China. So all of people walk on the street and then protest, and then this lasts for a very, very long time. They close down the train station and etc. And especially they take down the very important area, which is it's like a central financial hub in Hong Kong. That's why cause not just a domestic problem, but also regionally, they have a huge impact as well. And moving on is the territory dispute. So for example, here is the China and Japan. So I think there's an island, through the history, maybe like centuries ago, it belongs to China. Then after that, Japan also claimed that at once this particular island, Senkaku Island, belongs to them. So even until today, both of the nation claim that this island is belong to them. I think because also this island have some rare resources. So yeah, both country, they want to step their foot on this island. Yeah, and then this one also will escalate to the relationship between the two nations, because if you know the history, these two countries after World War II, yeah, they has been fighting, right? And another example for you guys will be the Israel and Palestine. We know also recently they have been like bombing each other. So someone claims that like long time ago, Israel, this land belongs to the Jewish, and then after that, yeah, things happen, right? And a few hundred years ago, the Palestinian already live on that land, and yeah, anyway, just like they keep fighting with each other. This could be one of the example. And another one is Taiwan. So Taiwan, they claim that they are like an independent country, but yeah, China doesn't say so. China says that Taiwan is part of them. So Taiwan is just one of the state or a province for China. So yes, though they have been fighting, also they have some trade embargo, things like that, put pressure on Taiwan politicians. Yeah, they want to have the Chinese government want to have control over Taiwan in like major issues. Yeah, so this will be one of the example for territory dispute. And also economic sanction. The example would be like EU sanction on Russia oil production, and also they put on a price cap for the Russian oil exports. So this means that they only will buy the Russian oil if they sell it below a certain price range, or else they will not take any oil supply from Russia. This is like a very recent news. It happened late last year or early this year. Other example could be the North Korean section as well, because we know North Korea, they have been like developing their nuclear weapon, and then also the international body that has been putting pressure on the North Korea. Also, they have like economical pressure, say I don't take some of your exports, and then I will not sell things to you, things like that. Just want to make sure that North Korea, they will more focus on human rights, more focus on their people welfare, rather than develop their nuclear weapon. So this will be another kind of economic sanction, an example for you. And moving on, trade war could be one of these as well. And yeah, the very famous one, the US and China trade war, and I think it's still ongoing and even until today. So it started back in 2018 when the Donald Trump was the US prime president. So he actually is the one who initiated the trade war, and I think this is still ongoing case. It's happened until today. Yeah. Other example could be the South Korea and Japan trade dispute. So yes, these two countries, according to the history, both countries also, they have invaded each other, and then, even until today, they are not happy with each other. They always have some trade dispute. And like last time, like in the past decades, when South Korea, they want to have the technological advancements, they want to build their own chips and some things, and Japan's reluctant to export some of those very important parts for South Korea to move on with their tech developments, things like that. And then also South Korea, they also reluctant to sell some of the goods or some of the stuff to Japan. Yeah, this is like the example, and another one is Australia and China, because we know Australia they are very rich in commodities. They are very rich in some of the metals, and we also know that China is one of the top importer for commodity. When last time when China they start to be booming, their economic growth superbly. They import a lot of commodity from Australia and also dairies and things like that. But at some point, when the Australia joins the Western Union, they try to put pressure on China. And they start to condemn China for something, and then also like they exchange sword. So yeah, at some point they have some trade dispute as well. But I think recently the tension between the two nations have already softened. That's why now what happened in China will have more influence on the Australia dollar as well. So if you trade on the market, you know recently why Aussie dollar has been quite bearish recently. This the lackluster of China economy could be one of the major factor why the Australian dollar is not doing so well recently. Yeah, so these are the few examples of geopolitical events, and I would say those that I mentioned earlier have a definitely will have an great impact, great influence on the financial market, especially those things that we are currently trading, like the major pairs, those forex, dollars, pound sterling, euro, and some commodities like oil, like gold, etc. Yeah. Moving on, I will discuss with you guys several real life events, and also share with you guys how does it have an impact on a particular asset class. The first one would be Brexit. So Brexit means British exit. So UK, we know long time ago they are part of the European Union. So they are one of the member states for European Union. And of course, we know in the past, some of the member states in the European Union, like the Greece, Italy, Spain, like some of the country, they are not doing well. So at some point, the British people, they are fed up. They are disappointing with this economic bloc. So some of the people actually voice out, say, maybe we can leave this European Union. We can live better without them. We can be on our own. So I think in June 2016, they have a referendum. So all the Britain, they are allowed to vote whether to stay within the economic bloc, the European Union, or they leave. They can be independent. So the result shows that I think the result is very, very close. Only like 51% of the people in the UK vote to exit, vote to get out of the European Union, and 49% of the people actually are willing to stay. And the result, we also know, I think I'll show you the chart. So let's see what happens. So that the geopolitical event happens in 2016. So we've moved back to 2016. Yep. And it happened in June. If I'm not mistaken, was on 26th of June when the result of the referendum is out. So yes, you could see what happened to the pound sterling. So people actually, they are not confident that UK, they can be with themselves, you know. What happened to this? Yeah. And then have a sharp plunge within days. Yep, it traded to the lowest and in years. See, and people think that UK, they need the European Union to be better off, because a lot of trade, they are related to the entire economic bloc. So without them, and they are so-called isolated in this Euro region, so they're going to suffer. So when the result of the referendum up, the pound sterling actually plunged. So not just the pound sterling plunge, so it actually also have an impact on the euro. So let's look at what happens in 2016. What happened to the euro? Again, the impact on the euro is relatively lesser if you compare to the pound sterling. But you see on this particular day, the volume for open a short position also quite high as you compare respectively to the previous and the post date after the referendum. On the day, actually there's a shock, because we also know that there's only just a few very strong countries within this European Union. The strongest one, the big brother of the European Union, will be Germany, and also France, and then moving up will be Italy. So in the past, UK actually is like a third or the second strongest economy within this economic bloc. So when the UK decided to get out of this economic bloc, get out of the European Union, people also worry that could the European Union survive? Could the European Union become worse off? Oh, because like long time ago, if you can remember, I think in 2008, Greece, they have a sovereign debt crisis where the country nearly default on their sovereign bond. They could not meet their obligation, and after that, countries like Italy, Spain, who else? A few countries, they are having a similar problem, because in 2028 we have this global financial crisis where the Lehman Brothers collapse. So people also think that UK is one of the strong muscle in this European Union. So when UK decided to leave, it could have a very negative impact on the euro strength as well. That's why you could see there's a punch. But I mean, overall, before that, the euro is already traded in a very low region. That is plunged from like 1.4, the peak, to nearly 1.11, 1.12. These regions plunged quite a lot. That's why you can see the impact on the euro, despite it's a plunge, but it's not as the impact is not as huge as the pound sterling. So the next one is the Russia and Ukraine war. So this one happened in this what happened in the near term. It happened last year in February 2022, when Russia invaded the Ukraine, because they say Ukraine, they're going to join the NATO, join the Western Union, and it will be a potential harm to the border of the Russia. The Russia claims that maybe the America, they have better control and put pressure on Russia. So Russia actually invaded Ukraine. So what happened is the Russian troop near to the border between the two nations, and also the president actually so at the end, like 8 million of the Ukrainian have been internally displaced, where they lose their home. They have to move outside of those war zone, and also more than 8 million of the Ukrainian actually fled the country. So every time when there is a war, especially the big one, like what we mentioned earlier, where there's Israel have war with the Palestine, or last time when 9/11 happened, and after that US declare war with the Middle East countries, several Middle East countries, the Iranian and etc. So in those times, what will have the most direct impact will be the gold, because gold will be treated as the safe haven assets. When there's any uncertainties in the financial world, people will tend to hold more gold to protect their capital, protect their fund, because throughout the history we know that gold has relatively stable in terms of their value. So yeah, anything happen, people will rush to gold. Even like recently what happened in the US, when they have like a banking crisis, people will go to gold. When there's a financial crisis, people will at first think of gold, will still go to gold, and gold price will spike up. So this one happened in the February 2022. So let's see what happened to the gold price. Yep. You can see actually the price from below 18,000 no 1,800 and quickly escalate to break above the 2,000 mark. So it actually nearly touched the historical high of the gold price, because remember last time gold price highest was just 2076, and when the war outbreak, the gold prices actually hits to the top, the highest to 2017. So just like a few point before to hit its record highs. So maybe in the near term, we want peace, but yeah, if something happen, any hanky panky things happen, when you think that there's something's going to be not safe in a financial world, we can always look at the gold price. But also there's other kind of safe haven assets. One of it will be the dollar, the US dollar, because we know that the US economy is the strongest now in the world. We all know, of course, China is picking up, but yeah, at the moment, US, the economy is still the most stable, the strongest one. So yeah, it leads to the value of the dollar would be relatively more stable and valuable. So yep, the dollar would be one of the safe haven asset as well. People may also hold more dollar if there anything happen. And the new one, the recently one, would be the crypto, BTC. Maybe because like last time when the banking crisis happened, not just that people will rush to go, some of the people that are familiar with the cryptocurrency, people will go to hold more Bitcoin as well. So Bitcoin will be one of those. Yeah. And let's move on. Yeah, so the next episodes of what happens after after Russia and Ukraine, they have the war, and all the Western allies, the Western people, the NATO's, they try to put pressure on the Russian. So one of the example will be the economical sanction. So the EU decided to have the sanction against the Russia. And we all know that Russia is one of the top exporter for crude oil. And also, during the wartime, of course, the Russia needs to fund their war. So when they need the funds to fund their war, they need to get the money from what they have. So they need to export what they have, which in the case would be the crude oil. And EU sanction against Russia is to, stop them from making money to export their oil, and maybe there's a chance for them to end the war as soon as possible. So the Russian invaded Ukraine in February 2022, and after that EU proposed to and also approved to ban on the oil import from Russia. But then after that, they just put on the price cap on the Russian seaborne. I think, if I'm not mistaken, was just like $60 per barrel. And also this year, February, they extend and also have more sanctions on Russia. They also have sanctions on all the petroleum product that is export from Russia. Yeah. So let's see what's happened to the oil price. Again, because let's see in the early of the year, in early 2022, just now, like I mentioned, that Russia is the world top oil exporter. So at first, why the oil price spiked up during the war? So one of the reason is, no matter who, not just Russia, if anywhere there's a war, there's a tendency for the oil prices to shoot up, to trade higher, to surge. And also because now, especially Russia is one of the world top oil exporter. So people think that if Russia is now busy with their war, they might have a chance for oil supply disruption. So when the supply of the crude oil has got disrupted, lesser, and will push the oil price higher. So the war will push the oil price higher, and some oil supply disruption again put an icing on the cake, push the oil price to another high, actually break above the 100 marks. And then after that, when the price cap applied to the Russia, you see what happened. The price for the Russian oil have been kept in a very low range, and it was moving sideways after December. I think the sanction for the oil starts from take effective on the 5th of December, and then ever since the oil prices actually went sideways. Yeah, and because you might say Russia might not want to export their oil to those countries that apply a price cap to them. But at the same time, Russia, they are still, the war is ongoing. At first, they didn't thought that this war might last for more than a year. Maybe just a few months and then the war will end. But then, I think even until today, the war is still not ended yet. So it's an ongoing thing. And then Russian need the fund, they need the money, they need to export their oil. So no matter what, even the EU place a price cap for the Russian oil, but they still have to export it, and then the price got relatively stable in a very low range. Yeah, it was below $80 at some point. Yeah. So next time, if things like that happen, and then you make your own analysis, you can refer back to what happened in the past, in the history, and then you can gauge the price movement of the future price movement of those the assets. The next one will be the US and China trade war. So it is still ongoing. So it was initiated by the US then President Donald Trump when he took the office in 2016. He says that it is not fair for the US to trade with China because China export more to the US and US export less to the China. So the term of trade in between these two countries is not balanced. Meaning to say, the China sell more things to US, but then China didn't take the same amount of things from the US. So the trade is not balanced, and all the treaties, all the term of trade is very unfair for the US. This is what the Donald Trump say. Excuse me. Yep. And so Donald Trump initiate a wide range of tariffs from electronic products, and then some raw materials, and so agricultural products, like a very wide range. And they're talking in terms of like few hundreds of billions of product. And of course, when someone have sanction on you, have a high tariff on you, China also fight back. China also want to show their muscle. They say, US, you need us as well because we export the cheaper raw material to you. You need those to expand your economy. So this the war has been ongoing even until today. And let's see what happened since January 2018 for the dollar. So at first you could see actually the dollar actually plunged, because at first people think that China is, they really do it, have a cheaper raw material, cheaper things to export to US, so that they can use it to value add and then to sell it. And also those electronic products like TV, like the refrigerator, those are cheaper if you just get the export from China. You no need to manufacture it yourself. And so at a very short term, actually the dollar plunged. And you see after that, why the dollar rebound is also because they think at first they think that Donald Trump is quite crazy. I think they say this is yeah, he got out of his mind, he's doing a wrong thing. But after that, people think that this is might actually help the US economy. The manufacturer in the US start to gain, start to rebound. People take more things domestically rather than get things out of the country. So the economy actually grow better, and so that after that the US dollar actually rebound. So yeah. So this kind of thing is quite hard for us to analyze, because this is very depend on how the market perceive it. At first they think the US might need the China more, so weaken the dollar. People start to sell the dollar. But after that, a few months later, after they wait and see how's the development of the war, the trade war between the two nations, and they think that it might actually help the US economy, and they have the gain back the confidence of the dollar. And after that, yeah, the dollar actually rebounded, actually in a quite high percentage. Those are the things that is in the past, and then maybe we can learn something from the past. And if in the future something happen, we maybe can seize the chance and make some profit from it. So I will share with you my own thoughts at what might be the potential future geopolitical events that's going to happen. And of course, you can make your own analysis and then trade on those related assets like forex or gold or oil, etc. Yeah. So the one that I think will be the de-dollarization. Why is it? Because we know China now growing to be the second largest economy in the world, and maybe soon in a decades or two, maybe they will become the largest economy in the world. So they're becoming more influential in the global trade. And also China now has been promoting their currency, the renminbi, or some of the people call it the yuan. Yep. So they want to be more influential. They they are promoting their own currency to replace the use of USD. And also Russia and the Iranian, they joined to say they want to launch the cryptocurrency for international trade, because we all know that now majorly people will use the US for international trade, because at the moment now USD is still the most reliable currency. Yep. So most of the country, they will use USD to trade. But now getting more and more people, they will start to use the alternative currency to trade. Like China, they have been advocates to use their yuan, the renminbi to trade. And Russia and Iran, they have plans to accept cryptocurrency. And also for Saudi Arabia, because we all know that why USD is very strong, because USD is used to for a lot of commodity to denote in the USD, like the oil denoted in the USD, and then gold denoted in the USD. So a lot of things denoted in USD, and then also USD is the reserve for many countries. So, and then now if Saudi Arabia, the main world oil exporter in the world, they get the approval to sell oil in other currency rather than using the USD. So in the longer term, the influential for the USD might be softer, will be weaker. And then at the same time, in 2022 and 2023, Argentina and Brazil, they agree to trade with China while using yuan. They will no longer use the USD to trade, to use it as an intermediate currency. So they will use yuan to trade with each other. And if you're aware, there's an economic bloc, we call it BRICS. So including Brazil, Russia, India, Indonesia, and China. So within these few countries, I think they will start to use the yuan to trade between each other. So, yep, maybe in the longer term, people will rarely use, not to say rarely use, the use of the USD will be not so strong as before. And also in their forex reserve is the same. So in Egypt, they announced that they have the intention to issue the bond in yuan to raise their capital. In the past, they would use the USD, but now they have the plan to issue the bond in the renminbi. And also Russia, they always is the enemy for USD. So since 2021, they will eliminate the dollar from their national wealth funds. So to reduce their vulnerability to the Western sanction. So they don't want to tie up with the USD so that they can have the control over their national wealth fund. So they have already eliminated the dollar from their fund. And also in China, since this year, 2023, their state-owned bank have substantially reduced the interest rate on USD deposit. So last time when people deposit the USD in the China state-owned bank, they will gain certain amount of interest rate, but now they discourage people to have USD deposit. That's why they cut the interest rate for the USD deposit. So this is another way to reflect that they just want to minimize the use of the USD. So I think in the longer term, maybe the de-dollarization will happen. So when this really happens, gradually might impact on the strength of the dollar. At the moment, DXY is now traded near, I think, 103. So it could be happen, trade below 100 or trade below 80, 70. That could happen one day, but we don't know. We don't know how this thing develop. But if you smell something, you think that something's happened, yeah, you can try to short on dollar, and or you do other thing. You can open long position with those that against the USD. The next one that I think might happen is the sovereign debt crisis. So two things. One thing, if you can remember, I think mid of this year, US, they actually have this debt limit crisis. So nearly the US going to default. They cannot meet their debt obligation thing in June, but they already reached the debt limit of 31.4 trillion in January. Yeah, so Janet Yellen, the Treasury of the US, and then she, just like tuning the account, the book. So it actually lasts until June, and then at the end they pass the debt ceiling bill, so they avoid such thing from happening. But this thing is like a never-ending thing. The debt for the US is going to be just higher and higher. So we don't know one day this will burst or not. So yeah, this is one thing. Another thing is within the European Union. So just now we mentioned that in 2008, Greece, they actually have the sovereign debt crisis, and then it's not just happened in just Greece, it's also happened to some of the countries like Italy and Spain. Yeah, and it's nearly go bust, but and then some of the people to step up to build up them, like the ECB, IMF, and also some of the bodies, they actually come out to build and solve this issue. So after that, the European Union actually has these austerity measures imposed, so to avoid this thing from happen again. But then we know what happened in 2020 when the world, having this COVID, and a lot of people, they need funds to boost the economy, because when everything locked down, is very miserable. So the European Union, they actually get rid of these measures, and so the measures have lifted, and so for people, for the country to recover from the COVID-19. So yeah, the measures is already lifted, and you know what happened, and then now the economy in the European zone is quite wobbly. It's not as good as we thought, and especially after they have, after COVID, and then they have the zero interest rate, and then after that they have like a very high inflation, and then now the ECB try to control the high inflation, and then raise the interest rate to a very high level, try to tame the inflation. But that have a drawback as well, like a sudden break when you drive in a high-speed car. So it might harm the stability of the financial markets. So we don't know really what's going to happen next, but we have to be more careful, be more cautious for what's going to happen in the future. So yep, sovereign debt crisis might be one of those that might happen in the future. Yeah, this is all for my sharing today. We talk about the geopolitical events and the impact on the financial markets, and the direct impact on several asset classes. I hope that it might help you in your future trading.